So again, would like to say good morning to all the participants and welcome everyone to the December 12th, 2024 webcast hosted by Integra Resources to provide an overview of the 2024 drilling results from the Wildcat deposit announced this morning and to provide a year-end corporate update. My name is Jason Banducci. I'm the Vice President of Corporate Development and Investor Relations for Integra. I'm joined on the call today by Integra's President and CEO, Jason Kosik. The webinar today will feature a presentation by our CEO, followed by a live Q&A session. We'll hold off on answering any questions until the end of the formal presentation. Please register your questions into the queue through the Q&A feature on Zoom. With that, I'll hand it over to you, Jason, to kick off the webcast.
Thanks a lot, Banducci, and thank you all for joining today. As I mentioned, we'll do a brief summary on the drilling and then go through a brief corporate update and answer any questions people have at the end. I will be making forward-looking statements. The cautionary note and disclaimer is located on the company website, and I encourage you all to go through it. So briefly, it was a very successful program at our Nevada North project focusing on our Wildcat deposit. Really what the program was designed to do was to infill, provide some met work, some geotech work, understand the grade continuity, expand the pits on the oxide potential, and then really look at the feeder. And we'll run you through that today. Quick summary on the Wildcat deposit. We're looking at 1.5 million ounces measured and indicated and inferred. Of that, 80% of the resource is measured and indicated. I should know that even though it's a PEA, 80% of that being M&I is quite rare for a PEA, and the conversion rate on a tonnage and ounces basis is around 87 and 90%. Not only that, as people may know, our Nevada North project is located about 30 miles from our recently acquired Florida Canyon project, which we'll touch on later in the presentation. Quick summary on the PEA highlights, showing a 13-year mine life, AISC just shy of 1,000. You're looking at 1 million ounces payable, pretty steady state of around 80,000 ounces gold equivalent. Right now, you're looking at an NPV5 of 490 and a 54% IRR. That is using a $2,000 gold price and $2,300 silver price. You can run it at whatever price you want, but unfortunately, our sensitivity tables only go up to 2,000, so that's all we can disclose. So the program consisted of 10 holes, totaling just shy of 2,000 meters. And as I mentioned, we had some holes inside the pit that were used for geotech, for geometallurgy, and to put in our piezometers to test for the water table. The other holes, we had holes outside to the pit to the east. Those were testing some oxide targets that would potentially push the pit to further to the east. And then the holes to the north were really looking for the feeder. What is controlling all of this mineralization? The program was very successful. We took some really major step outs from 200 to 800 meters outside the current resource. And it should be noted, when you're drilling blind targets below a post-mineral rock, the basalt, it's quite challenging, okay? But really what we saw is quite intriguing that we're slowly vectoring into the potential feeder in the bonanza zone that's commonly associated with low sulfidation epithermals. The highlights were quite significant with 0.5 over 62 meters, 0.38 over 64 meters, 0.27 over call it 150 meters, which were very much in line with the overall grade of the deposit of around 0.4. It should be noted though that what is really amazing about this project is the life of mine strip here is 0.2. And when you look at it on a strip adjusted grade basis, it's one of the highest strip adjusted grade projects in the Great Basin. So how much waste you have to remove to get to your ore, which really impacts on your margin. So you see mineralization comes right to surface, so you're basically just scraping off the top of the hill. What we also did is We put in our piezometers that were installed in some of our holes to support the further on the permitting process. And why that's important is that two things really control what permitting direction you go down, as either an EA or an EIS. And given that the Wildcat pit, the life of mine strip is 0.2, so there's minimal waste rock on surface. So that keeps your total surface disturbance below 640 acres. In our infill holes, we did not intersect the water table. So what that is telling us and are telling our permitting team is most likely Wildcat can be permitted under an EA, which is a 6-month process versus an EIS, which was very intriguing and very nice to see through the program and removing that risk of where the water table was. This is a schematic cross section of what we did to plan for looking for the feeder of what's controlling all the mineralization. Okay, so as I mentioned, this was a blind target. There were some geophysical anomalies, some mag and IP that were indicating on where this main diatreme could be. So our first hole, we took a massive step out over 800 meters, and again, drilling about through 150 meters of basalt. And what that hole showed was that the alteration was telling us that we're too far outside of where the bonanza zone would be. And what we were seeing is lower temperature, more clay-rich environments. So the team then stepped back closer to the pit with hole 16. That hole was very interesting because we started to see a more silica pyrite alteration, which is indicative that you're getting closer to the feeder. Okay. Then we came in with 15, and you see this green stratigraphic horizon. And what that shows us when we intersected that, it was very interesting because that is the lake sediments that would cover over the big diatreme vent, the vent that's causing all of this volcanic material. Unfortunately, or fortunately, when we got through that, we drilled into what you see, there's this pink rock, which is a post-mineral felsic dike, okay? What's intriguing about that, though, is that these post-mineral felsic dikes would most likely be exploiting the same structures that are bringing in all the mineralization that you see highlighted in red. So it was a very successful program. The idea was in our next program is to step in between hole 15 and hole 16 and drill through the post-mineral dike to see if there was mineralizations on the margin. Not only that, now that we know the exact location of the diatreme, we can also then drill on the margins because the mineralization is either going to come up on the margin of the diatreme or along the fractures in the middle that the post-mineral felsic dike is exploiting. So it was very encouraging to see our schematic model that was come up, with over 2 years ago. The model is holding together, and we're slowly adding pieces to the puzzle that are vectoring us into where the potential bonanza zone would be. And commonly, you don't see that. You're constantly changing your model, but it's very encouraging that the model is holding together. And now we know for our second pass of drilling exactly where to put the holes. And as I mentioned, when you're drilling blind targets, it's very challenging, and you have to just listen to the rocks and see what it's telling you to allow you to update your working hypothesis. With that, I'm going to now give a quick corporate update. It's been a while since we had our last presentation. I think everyone on the call is familiar that we just acquired Florida Canyon. It closed just about a month ago. What that really does is it makes us now the leading growth-focused precious metals company in the Great Basin. For those of you who don't know what the Great Basin is, it's a geological province that covers southern Idaho, a little bit of Western Utah, pretty much all of Nevada and Eastern California. Okay. And that Florida Canyon project, we'll touch on it, was doing about 70,000 ounces, pretty steady state. That is really the matchstick that unlocks the $1 billion of development now between Delamar and Nevada North. Okay. For 25, there's going to be a major focus on profitability and operational excellence at Florida Canyon. There is a number of optimization studies that are ongoing now and will go right through 25, from basically size recoveries, geotech to steepen the pit walls. So there's a number of things that we're looking at, and a number of things that were flagged before, and a bunch more that we have identified now being the owner. The net outcome of what we want to achieve with all these optimization studies is lower the cost profile by about 10 to 15% and extend the mine life for 2 years within the Florida Canyon mine proper. Okay. It will take time to do that, but the work is ongoing. The idea will be to put out an updated technical report in the beginning of 2026 that will include all of the optimization studies and the potentially extended mine life. With that, we would then show 3-year guidance so that people know what is coming down the line, as opposed to this year where we're just going to show 2025 guidance, which will come out most likely in early Q1. Okay. We are still very much committed to advancing our 2 development projects, both Delamar and Nevada North, through the permitting and through the engineering studies. It really comes down to now what great companies do, no matter what the industry you're in, is disciplined capital allocation. I know some people are asking why we don't do more exploration at Nevada North or at Delamar. The reality is that you're sitting at a 10-year mine life and a 13-year mine life right now. So when you want to add years to Nevada North or Delamar, and then you discount them back, it's not very NAV accretive. Okay. It's washes out. What is very much accretive is extending the mine life at Florida Canyon and putting all the optimization work in to lower the cost profile. Okay, that's instantly NAV accretive. Okay, I know there were some questions about other M&A. You know, we've done a lot over the last couple of years. We will hit the pause button, but we always do look at strategic things within the Americas. Sorry, but there will be nothing done currently. I think we really need to see a re-rate in a better currency to look at anything further. To summarize, what we've done here is a lot like what great companies have done in the past. What we've done is we've created a regional mining platform that'll persist for over 20 years and a production profile that will be steady state around just over 250,000 ounces per annum. Okay. You have a resource endowment of just over 10 million ounces. You have immediate exposure and leverage to the gold price, providing cash flow from our Florida Canyon asset. And the company does not envision going back to the market. Florida Canyon will cover all other expenses between Delamar and Nevada North. Okay. The beauty is that all of these projects are all the same geology, same processing method, same mining rates. So they're all low sulfidation epithermals. They're all around 30,000 ton per day, and same processing, heap leach, and with the CAC. So it's really a wash, rinse, repeat. And as I mentioned, Florida Canyon is about 40 minutes to Nevada North and about 2.5, 3 hours to Delamar. And what that allows us to do is control our consumable costs. So about 35% of your operating costs are your consumables. Okay. I'm talking about cyanide, lime, ammonium nitrate, diesel, your truck tires, your maintenance. And the beauty about this is now is that we use the same provider for all of the projects. And I can give you one example. Right now, Florida Canyon was getting cyanide delivered to site for $1.09 a pound. Prior to the acquisition, Delamar was getting quoted $1.45 a pound. Post acquisition, we went back to the same provider. We're now getting cyanide delivered for $1.15 a pound. So the operational synergies are significant. Not only that, to build a team in a very competitive work environment is challenging. And Florida Canyon we have about 280 employees there that have been working on an open pit heap leach for 20 plus years. So securing that local workforce and enhancing our social license to operate within this regional mining platform really sets up Integra for success over the coming years. Not only that, we're backed by some of the best strategic shareholders in the business, from Wheaton Precious Metals, BD Capital, and now we welcome Alamos as well. So quickly, highlights from the economics perspective. What you're looking at for Florida Canyon is a 7-year mine life, pretty steady state of 70,000 ounces, and an AISC, life of mine AISC for 1525. There are higher cost years and there's substantially lower cost years, okay? And as I mentioned before, the idea we're working through on all these optimization studies is to really lower the cost profile and extend the mine life. Delamar, we are on track right now to have the FS out end of Q1, early Q2. I should note, like I mentioned, is right now got an NPV5 of 470 and a 47% IRR at $2,000 gold, 23 silver. What will be changed in the FS is a few things from a technical perspective to lower costs, obviously, especially from a CapEx perspective. But we will be including the 42 million tons that we drilled in the stockpile. So right now, what's driving the economics is 81 million tons. So we're adding another 42 million tons to extend the mine life, but keep the production profile in line with what is disclosed in the PFS of around 136,000 ounces per annum. From the permitting perspective, we envision having the notice of intent signed by the end of next year. We've updated the mine plan of operations to include the new engineering designs that will be disclosed in the feasibility study. From when the notice of intent is signed, you're now under a 2-year shot clock under the new permitting regulations that went in July of this year. Okay. I touched on Nevada North, but I'll just say it again, looking at an NPV5 of 490, 54% IRR. And as I mentioned earlier too, it's a 13-year mine life. It still has excellent growth potential, but as I mentioned earlier, it's about disciplined capital allocation. So adding year 14, 15 to Nevada North isn't NAV accretive. Extending the mine life and increasing decreasing the cost profile at Florida Canyon is instantly NAV accretive. Right now, it's really nice to see is that the building blocks are now in place for a 20+ year mining platform, and really seeing significant growth potential to triple production over the coming years to just over, call it 280,000 ounces per annum, making us one of the leading growth-focused precious metals companies in one of the arguably the best mining jurisdiction globally. From a corporate perspective, market cap fluctuating between 160 and 180. Cash balance is around 33.8 million right now. As I mentioned earlier, with the acquisition of Florida Canyon, we do not envision going back to the market over the coming years. Most likely, when you do project financing, we might have to do something at that point. We have a really top tier from institutional shareholder base. And as I mentioned earlier, great strategic shareholders that, if you don't trust our technical team, you can definitely trust both BD, Wheaton, and for their technical skills. Analyst coverage, target prices range from 350 to 550. And that's all I need to really say there. Where we're now positioned in our peer set is really, a leading resource endowment, a very attractive entry point, and a significant growth profile that will gap up significantly over the rest of the peer set. Right now, we're probably about 0.22 on a PNAV basis. Why we are there is we just closed Florida Canyon just over a month ago. So we were a developer. We see in the near term a re-rating to trade in line with our peer group between 0.4 and 0.6. As we put out guidance and as we start publishing our financials. As the cost profile decreases and the production increases, you will then see, a longer term re-rate as you become an intermediate producer from a junior producer. The beauty about as our share price increases, there is potential for us to be included into the GDXJ and the Russell 3000. Jason Banducci will touch on it shortly.
Sure, I can quickly jump in, but as you can see, I mean, there's simple criteria that indices like the GDXJ look at for inclusion. I've highlighted here some of the key criteria for this specific index, but again, you can see by the check marks, we have $150 million market cap. We trade at least 250,000 shares per month, well exceeding that. And we do generate at least 50% of our revenues from gold and silver mining. So the one area that we are focused on bolstering this year is the trading volume. And so to be eligible for the GDXJ, you've got to trade $1 million US of average daily trading volume. I think the last time we checked, we're north of 600,000-700,000. So we're getting there. We've seen, obviously, as a result of this transaction, the liquidity has really picked up. And again, we're going to spend a lot of time next year on focused on US retail and on execution, which is going to drive both the share price and trading liquidity. So based on what we see, we do expect to be eligible for the GDXJ by the end of next year.
Thanks, JB. So from a timeline perspective, we will have guidance out in early Q1 for Florida Canyon. We will execute all the optimization studies. We can go in detail if people have questions later on what we're doing and what we're focusing on. And that would then go into an updated tech report that would come out in 26. For Delamar, the feasibility will be end of Q1, early Q2 for that. On top of that, we will have the notice of intent, which executes the 2-year shot clock from a permitting perspective. In the background, Nevada North will be doing some of the longer lead items that are associated with permitting, that being the geochemistry and the humidity cell testing. We have a very robust greenfields portfolio, has about 5 projects in it right now. So we're looking at, creative ways to unlock value by divesting those assets as we get no value in Integra for those currently. So in summary, we now have immediate production to a really strong metal price. You have a really nice, robust portfolio that, will be tripling production over the coming years to achieve a mid-tier status. You have a resource endowment of, just over 10 million ounces, I mentioned, a regional platform that allows us to control our costs, increases, our talent retention and our social license to operate within those local communities for, over 20 plus years. We got great financial strength and great support from very, well-known strategic shareholders. And right now, a very attractive entry point, given that we just transitioned from a developer that, commonly these companies trade from point one to point two. And why they do that is because everyone knows to bump these projects along, you need $10 to $15 million a year. Now we are not in that position, and we can grow, out of cash flow and move these projects along, which will be quite exciting over the coming years. With that, I'll pass it to everyone for questions.
So just a reminder, if you do have a question, please register it in the Q&A function. We had some questions that were submitted earlier, so we could run through those, and then again, we'll leave some more time at the end for more. So the first question is just around operations, projections, kind of when we see communicating Florida Canyon, I guess, figures to the market.
Yeah, so we'll put out production and guidance for Florida Canyon in early Q1. Okay, we cannot disclose anything prior to that. Okay, our Q4 numbers will come out most likely in March. But what I can tell you is that we don't envision material change from the tech report that was published in July of this year. Okay, when I say material, looking at plus minus 10-15%. Okay.
And I think just to add to that, we will look to, once we've again wrapped our head around the full year results, we would likely release the Q4 full year production results in January, and then we will announce a date for the formal Q4 financial statements, which will be in March. But again, between that and ahead of the BMO conference, we're going to aim to get 2025 guidance out. So the next question was just around permitting, and if you can comment on how you see the new administration impacting or changing timelines, process, anything with regard to permitting in the U.S.
I think Trump had a really good tweet the other day around this, and companies that'll put in, significant money into the country will be fast tracked. I think with the new administration, it'll be more streamlined and allow the agencies to be held accountable for timelines. That being said, the new permitting process, which is basically a 2-year shot clock once the notice of intent is signed, was put in place this year. So I think, we can go into great detail, but really in summary, I think it'll just be more streamlined and agencies will be held more accountable.
Even just to add to that, I think, when you look at the projects in our portfolio, it's taken a long time, a lot of money, and a lot of effort to get Delamar to where it is. And we're one of, I think, 4 projects in the US that are actively being advanced, precious metal projects that are actively being advanced through permitting. We expect Perpetua's Stibnite project to receive the final record of decision, hopefully by the end of the year. And I think, again, that will bode well for all projects in not only Idaho, but in the United States. But yeah, I mean, I think, again, just to underscore the scarcity value, there's not many projects other than the 4 that I've discussed that are actively being advanced through permitting. And so I think, again, when we talk about M&A and we talk about the portfolio we've got, we're not in a position where we need to do a deal. We have a pipeline of 1 production asset, 2 more development stage projects, and exploration. So I think again, I'm going to dovetail this into the next question, which is M&A criteria. And I think we would not be, again, Jason, you can correct me if I'm wrong here, but I don't think the focus from an M&A perspective in the future is not going to be more development or exploration. It's going to be likely we would look more at production.
Yeah, that's well said. And to hit another note is that from a permitting perspective, it's very much project dependent. Okay, so for example, with Delamar, it's mostly private land and BLM land. There's no Forest Service. Okay, there's no major waterways. There's no wet tailings. It's a restart of a mine. So it's a brownfield site. It's been a mining district since Joseph Delamar discovered it in, the late 1800s. Okay. So it's very much project dependent. Again, with Nevada North, it's limited surface disturbance. So it's under 640 acres. You don't touch the water table. We have our water rights secured through our T finite permit. So the projects that we have are strategic in with respects of the ease of going through a permitting process, because some projects can be quite challenging given their location and the impacts that they have in that location.
There's a follow-up question to the M&A asking about if you wanted to pursue M&A, would you consider doing it with cash versus shares now that you have cash flow? If we do believe that our shares are undervalued, rather than waiting for a re-rate before. But I think, again, I'm going to lay this one up. I think, as you mentioned many times, the focus is on primarily capital allocation and showing the market that we can operate Florida Canyon profitably and with operational excellence. And I think, again, when you look at capital allocation, allocating capital to improving the operations and optimizing the operations is going to generate better shareholder return than going out with cash and buying exploration projects.
Yeah, and I think there's a big focus here on earnings per share. So we really want to limit more dilution. So, I'll leave it at that. But as one of the largest individual shareholders here, I'm very cognizant of that, because I don't want to get diluted either. Okay, I've put over $1.8 million of my own cash into this company, so I'm very cautious on that. And you can say, okay, we did this acquisition, but the reality is that for the next couple of years, you'd have to be raising $15 to $20 million a year. And then when you go build Delamar, you're going to do it from a weaker position, and your cost of capital when you do project financing at 0.1, 0.2 is going to be significantly greater. So getting us off the dilution treadmill and having a much better currency when we go build our next project was much more accretive and honestly less dilutive over the long term.
Yeah, I totally agree with that. Someone asked about the 4 other projects that are actively being permitted. Off the top of my head, I think it's Waterton's Spring Valley, I believe it's called. We've got Stibnite and Orla's Railroad project. I don't think I missed anything.
The CK project in Wyoming, I believe, just received their permit. It's a gold copper thing in Wyoming.
Yeah,
so that's all of them from a precious metals perspective.
There's a question about project sequencing and given Nevada North's proximity, Wildcat's proximity to Florida Canyon, does it change how we think about project sequencing, whether it moves or we would consider moving Nevada North in front of Delamar?
Yeah, I think, it's too early to say that. The reality is that Delamar is much more advanced on the permitting front, and also on the engineering front, right? A reminder that Nevada North is only at a PEA stage. We can get it up to an FS quite quickly, but that work still needs to be done. We are doing it. Right now, I still think Delamar comes first, but the reality is that, one of the reasons why we did the Millennial Integra merger was it allows us to have two horses in the race. So, whatever gets to the finish line first, will most likely be built first. But, I'll emphasize that, Delamar will be at a feasibility next year, and the notice of intent will be signed next year, making it more advanced.
There's a question about whether there's been any corporate site personnel changes that have occurred as a result of the company transitioning from development stage to production.
Yeah, Greg Robinson, the GM at site's been done a great job. There's been no changes at site. We don't see any changes at site. The team's been doing a pretty bang up job for the last 2 years. Hitting record production in 23, and coming under budget on the major capital items this year pertaining to the heap leach pad expansion and the new CIC circuit. From a corporate perspective, yes, we're going to have to make some changes and increase the team. Integra has a very small corporate team, and overseeing your producing mine and then 2 development stage projects, we will need more support at the corporate level.
Next question is, and I mean, lots of people are asking about the hedging strategy, and I can touch on that. And obviously, it's something that we've mentioned and had many discussions, both at the executive level, board level, and with all of our shareholders. So it is something we are looking at executing. We will notify the market once everything is in place, and it will likely be a combination of put buying and or a costless collar. Doing this stuff it's always fun because you're trying to predict the future. And I think, again, we're trying to take a step back and understand the purpose of the hedging is really to protect our downside risk. We want to ensure that we do not have to come back to the market until we get to project financing at Delamar, or be it Nevada North, but we do not want to issue a single share until we get to one of those major decisions. And so again, we think about hedging more as an insurance policy than a revenue maximizing policy. And so it is something we're doing. It's top of mind. These things are always a little more complicated than they seem, and just saying, go put a hedge in place. And so we're working with, again, our shareholders. It's something that will be discussed in sort of the year-end board meetings in the next couple days. And as mentioned, we will notify the market once everything's in place. We're watching the gold price every day. We're at 2680 today, and I think we're looking at pricing on puts and the collars every day. And you're in the current price environment, at a $2,400 floor, your ceiling on a collar would be over $3,000. And we would never hedge up to 100%. We'll do a portion of production, and a goal of ours is to leave exposure to the upside. So we won't cap, more than 50% of production is how we're considering it right now. But just to mention it again, we will notify the market when it's in place, and we're hoping to get it all put in place by the end of the year.
Yeah. And, just to add on that is that, very much aligned with our overall strategy, and it's being disciplined in risk mitigation, and protecting the downside is very important, because you have 2 other bigger projects that are really coming online. And really, like I mentioned earlier, is Florida Canyon, that is the matchstick that unlocks the $1 billion of development NAV. And we need to make sure, there's things in place to protect that. And like I said, executing on a hedging strategy is something that will happen. It's just takes time.
There's one question that just came in, and again, I think it's too early to really answer, but asking about considerations for transporting ore or loaded carbon from Wildcat to Florida Canyon for processing and what that would look like. And again, I think I'll speak for the other Jason. It's too early to tell. We've owned the project, or we've owned the producing asset for just over a month now, and so we need to do our work. We need to look at optimization studies, but I think the bulk of the work next year is going to focus on profitability and operational excellence at Florida Canyon. We can later look at how and the best way to incorporate and sequence Florida Canyon production with Wildcat. I don't know if you want to add anything else there.
Yeah, really, when you're dealing with like 0.3, 0.5 rock, you're not hauling that rock more than a couple of kilometers. This is not economic. And so each project needs its own pit pads, ponds. The one thing that you can do is truck the loaded carbon to the ADR plant at Florida Canyon, which saves about $7 to $8 million. Okay. And the other thing, the other synergy that is potential is that as Florida Canyon goes into the later phases of mining, you don't need the full fleet or the full team. So some of the 777s and the 992 loaders would move across the highway, people as well, which would offset some of the initial capex at Nevada North.
Long answer short is we still need to do a lot of work to understand what this is all going to look like. But as we do, we will inform the market, and as we continue to build out studies and do trade-off analysis, again, we will communicate that to the market. There's just one last question on permitting at Delamar, just to understand that from notice of intent to your actual record of decision, kind of what needs to happen, and maybe just a bit more color on what the process and structure looks like.
Yeah, it gets very, I don't want to get into too much detail, but you basically go into the NEPA process and into the draft EIS, and then you get your EIS granted, and then your record of decision. And concurrently with that, you have all of your state permits as well. So cyanidization, your air quality, your wetlands, all that stuff is run concurrently on the state level. And that's why, you got to do it's just a lot of work ongoing throughout the whole process. We can get into great granularity here, but basically from the notice of intent, you get into the NEPA process, and you have to run your state permits concurrently with that to get your record of decision. Basically, 2 years from your NOI being signed.
And so we're just about to reach the end of the allocated time here for the webinar. Remind people that we really pride ourselves on being available for answering any questions at any time. So if we haven't gotten to your question, or if a question comes up at a later date, feel free to reach out to either Jason or myself. We're always available to set up a call, and always happy to talk to investors about really anything that we can. Just a reminder that a recording of the webinar will be made available on our website. And I just, Jay, quickly flip it back to you if there's any final remarks you want to make before I close it out here.
No, I'd like to thank you all for joining. And like I said, like Jason Banducci said, feel free to reach out anytime if there's any questions or concerns. We'll always make ourselves available for all of you. Thank you very much.
Yeah, and I just again want to thank everyone for attending, and from the Integra team, just wishing everyone a safe and happy holiday season. We look forward to providing another update in January.